And that's the example we're going to work with today with CR Construction Company. And what I'd like you to do is turn, first of all, to page number 6.7, where we have the chart of accounts for CR Construction Company. And let's become familiar with where the accounts are. Now you'll notice the chart of accounts is set up with the same categories as all the other businesses we've been dealing with. So this is something you're pretty comfortable with. But find account number 230 down under current assets. That's jobs in progress, isn't it? Okay, we talked about that. Now, in the past, as we've been dealing with different companies, account number 230 was always assigned to an inventory account. If we were a builder of homes and we're building a home to be selling it in the future, we're building inventory, aren't we? And if we have 10 homes that are built and not yet sold, what are those 10 homes? Inventory. So jobs in progress is an inventory account, okay, for a construction company. Under property, plant, and equipment, you'll see you have the same accounts there that we've dealt with before. All of them having an accumulated depreciation account except for which one? Land, because we don't depreciate land. Under liabilities, we have, again, accounts are very similar to other companies we've worked with until you get down to account 350, progress billings. And that's that deferred revenue account that we accumulate advance payments in until we complete the job. What type of legal structure is this business? It's a sole proprietorship. You can see that. And the accounting in the capital section is the same in a construction company for sole proprietorship as it is in any company. Okay? So again, the only unique things in this account are those two accounts, or in this particular company are those two accounts. Okay. Now I want you to turn the page. This is a practice set that we're going to ask you to complete. It gives you the experience of working with a construction company and gives you all the facets associated with it. Now the first journal is called the Cash Receipts and Sales Journal, and this is where we're going to record the advance billings. As you can see, the job statements listed, there's 5 of them on the left side. And then to the right side, or on page 6.9 below the journal, you'll see another 6 receipts, or 6 transactions, and they were receipts of money. And these are 2 separate transactions, aren't they? One is a billing for an advance payment, and the other one is actually receiving that money. And there may be weeks or days or even maybe months, hopefully not, but could be, between those 2 transactions. Let's just record the first one together, the first couple together. The date on the first job statement is January 31st. So if you'll record that in the date column, and then move to the middle and find the reference number column and put 201 in there. And the description is Largo Hills. Now, in this case, are we getting money when we give them this transmittal? No. We might be sending it in the mail, okay? And we're billing them for $3,997. So that's a debit to what account? Accounts receivable. So in the accounts receivable column, write $3,997. On the right-hand side, we're going to identify what job number it's in, and we're going to put it in the column that lines up with that job. Well, according to this, it's job number 1 for Largo Hills, and so in the job number 1 column, we're going to write $3,997. Now, I want you to notice something about job number 1 column. It has underneath that a PB. Do you see that? That stands for Progress Billings Account. Okay? So we're going to debit accounts receivable from the left side, and we're going to credit Progress Billings Account on the right side. That's similar to this right here, where we debited accounts receivable $2,500 and credited Progress Billings. Okay? $2,500 each time. One other thing I want to point out about this particular job statement. Let's go through the process of how it was how we arrived at $3,997. We started a total bid. The bid for the job was $4,648. That's how much we expect to earn when the job is completed. Okay? But we are only billing them for 86% of that. Now later on we're going to talk about how that percentage of completion is calculated. How does that arrive at? But the way to picture it in your mind right now is we're 86% complete on that job, so we're going to bill them for 86% of the total bid. Now our costs weren't 86% of the bid. They weren't $3,997. At least we hope not. Okay? We hope that there's some profit in there, but we're not going to recognize the profit until the job's complete. So we're only 86% done. Let's go to the next job statement underneath that, and let's do that one too. Again, the job number's 202. It was on January 31st. That's the date we did all of our calculations, and that's pretty typical for a construction company at the end of the month to sit down and do their advanced billings. And then on the left-hand side, let's see, reference number is 202, and it's to Thomas Freed. On the left-hand side, again, we're going to debit accounts receivable, $3,266. And this is job number 2. And so on the right-hand side, we're going to put $3,140. Now the reason why is because we included sales tax with this sale. We have cabinets that we make and we sell, and we installed some cabinetry, and we had to charge sales tax for that cabinetry. So $3,140 goes to the sale, and another $126 will be credited on the right side under account name or number. Put account number 305. Which is sales tax payable, and then the amount is $126. Okay? Does that balance? Balances. Good. Okay, and the rest of them are very similar. One thing I want to point out, look at job number 2 column, and notice what it says underneath it. Sales. Job number 2 was a short-term job. We expected to have it done within the month. So rather than take it through progress billings, we're going to take it directly to sales. Progress billings only applies on those projects that we expect to exceed 30 days. Okay? So if a contractor, again, and I'll just reemphasize what I said before, if a contractor does only short-term jobs, they're just a plumber, go out and do just plumbing, short-term clean drains, things like that, will they need progress billings? Will they need jobs in progress? No, they won't need those 2 accounts. It's only for those jobs. And so some contractors, it may only be occasionally that they need those, or never at all. Others will use it all the time if they're working with large projects exclusively. Okay, now I'm not going, you could record one of these if you wanted to, but they're fairly simple and fairly straightforward. Let's look at the receipts on the facing page. The other 3 job statements, you can do those in a minute. Okay, but on the facing page, we have receipts. Every time we get money, we need to record where that money came from. That's normal of any business, whether it be construction or anything. But it's even more important for construction, because construction, we deal with big bucks. There's a lot of money that goes through a contractor's hands. And so it's very easy to lose track of it if you're not recording it someplace. Well, let's look at the first one. On January 10th, we received a receipt, so we would write under the date, January 10th, and then under the description it would be Frank Cord, and to the left of the description it would be the receipt number, 4701. We received $150, and it was an advance payment on job number 3. What are we going to do with that $150? Put it in the bank. So it's going to be a debit on the left-hand side to the bank, and it's going to be a credit on the right-hand side to what account? Progress billings, good, because it's a payment on account. Okay? That's no different than other companies that we've dealt with. Now let's just go, I'm just going to lead you through each one of them. We're not going to do them right now. But if you look at receipt number 4702, it was advance payment on job number 5, right? And 4703, it was some rental income. This wasn't an advance payment. Is this going to be a credit to accounts receivable? It's going to be a credit to a rental income account, which you'll find in the chart of accounts. We have miscellaneous income on 4704, just that vending machine commission that we got. And then job number 4705, we completed the job number 2, and so we got the full payment, and you'll be able to track that through. So that's going to be a credit to accounts receivable, right? And then we also completed, surprisingly, and we completed it prior to when we expected to. We really thought it was going to take us longer to do job number 5, and so we ran it through progress billings, and then it just went much faster. We were able to put more time and effort against it than we expected, so we got a payment on that, job number 5. And we'll talk about how to enter the completion in just a moment. Let's turn to the next journal, page number 610 and 611. 610, again, looks like any other cash disbursements journal, with the exception of, if you look at the right-hand side of the journal, you'll see that you have the job numbers listed there again. Once again, in job costing, we're going to keep track of the costs by job. And so to make it easier to enter into the subsidiary ledger, rather than having one column for all the jobs in progress, we'll break out and have separate columns for the different jobs so that it makes entry real quick. Okay? Now the date, let's go ahead and enter the first couple checks in. The date of the first check is January 15th. It's check number 2501. The name on the check is Henry Burt. The amount of the check was $1,200, so that's going to go under the bank account on the left-hand side. And on the right-hand side, we're going to distribute that $1,200 by the jobs that it applies to. Henry Burt did work on 4 of the 5 jobs that we were working on. And he allocated them out. When we got a bill from him, he showed us where he was working, where the job work was that he would perform. So it was very easy for us to do that. We just figured out what job number those jobs were. And so to job number 3, we charged $100. So on the right-hand side, under job number 3, write $100 in that row. Job number 2 was $200. Job number 1 is $800. And job number 4 was $100. Does that add up to $1,200? Okay, so that balances, right? Okay, let's do the next check together. Check number 2502 is Union Lumber Company. The date is January 15th. On the left-hand side, we write the amount of the check, which was $1,530. And on the right-hand side, we're going to allocate it to 2 of the costs. 2 of the invoices were for jobs, and so job number 5 got an invoice for $600. And job number 1 got an invoice for $800. And then shop supplies were $130. Why don't we assign shop supplies to a job?
Stuff that's used all the time.
That's right. It's just nails and things and maybe even tools that we're going to use on all the different jobs. And it would be a major effort to try to figure out, how many nails am I going to use at this job versus this job? How am I going to apply the cost of this hammer against 4 different jobs? So what we're going to do is just charge it to shop supplies expense, and that's going to go, we got a column for it. Does that balance? Okay, now, the next one is for utilities expense. Again, we're just going to charge it to utilities expense because it's utilities for our office. If we were paying a utility bill for maybe a house we were building out in West Jordan, or out in some other area, could we apply those utilities for that particular job against that job? Where we could, yeah, we could, okay, if we have extra bill, but otherwise, that's not going to be normal or typical. Okay, do you get the concept here? Now, once again, let's look at the columns. Column number 1, under job number 1, it says JIP, jobs in progress, okay? But look at job number 2. What count are we going to debit there? Cost of sales. Now, why are we going to debit job number 2 to cost of sales? Because we expect it to be less than 30 days. So we're not going to run it through jobs in progress, and we're not going to run it through deferred revenues. We're just going to do it, charge it directly to cost of goods sold. Okay? And what is that decision based on?
It's going to begin within 30 days.
That's right. How long a period we expect it to take us. If it's a 1 or 2 day job, it goes directly to the cost of sales. Okay. Now you'll notice also that on page number 611, you have 3 checks to Karen Peterson, Bob Rodriguez, and Frank Peterson. Notice that those are payroll checks. Okay? Now Karen Peterson works in the office. So we're going to charge her money or her payroll directly to office salaries. Okay? But Bob Rodriguez and Frank Peterson work out in the field. So their salaries are going to be charged against the jobs where they did the work. Okay? Now, CR stands for Clarence Roberts, CR Construction Company. Do you see Clarence's name there anywhere? You see check number 40 or 2511 to Clarence Roberts? That's an owner's draw. Do you think Clarence Roberts may have raised his hammer and done some of the work too? Yeah. But we're not charging his time to the job. Why? Because he's the owner. He's not an employee. Okay? He's got the rights or the access to all the rest of the money left over, right? And so he gets to draw from it. We charge that to a capital account. Okay. Now let's turn to the next page, the next journal. We got just the 3 journals here because we've combined several journals into that last one. And here we have the general journal. The first entry is to record the original investment. Clarence Roberts just started this business effective with this month. He invested $110,000 into it. $80,000 of it was a building and land. $83,000 was a building and land that he already owned. So that was the biggest part of it. Now we're going to go through on entries B, C, and D and enter the depreciation. I'd like you to do that right now.